There it goes. I am Rick McBride.
And I am Sarah Yaki.
And we are
Your
Property Masters. Look who's back. Yay!
We've already done this 2 times.
Come on, Haley. Yay! We missed you. I sit here all alone. Talk. No one wants to listen. They would much rather listen to you. Much rather look at you.
Rick, please.
And now you're back. Yay! I'm so excited. So today we're going to be talking about why you should invest in real estate and why it's one of the best returns that you can get on your investment. Of course, you shouldn't be 100% in real estate ever, but it should certainly be part of your portfolio. Our marketing director, Haley, pulled up these quotes to us that according to Forbes, if done correctly, real estate investing can be one of your highest asset classes, returning classes. And good old Andrew Carnegie, the billionaire, said that 90% of millionaires get their wealth from real estate. And actually, if you look at the Forbes top 100 richest people in the world, you look at that list and like of the top 20 or 30, like I want to say 70-80% of them are real estate. Of course, the top guys are the ones that get all the publicity, the Bill Gates and the Elon Musk. But if you go down that list into like 5 through 20, it's real estate. And it really is. And we're going to explain to you why. And, you know, if you want to be a billionaire, that's great. We'll love to know you. But, you know, we're just trying to make some money on our investment here. And that's what we're going to focus on today.
We're going to go over 7 reasons. Rick's probably going to go over 20 reasons, but we have 7 to start. Number one being?
I don't know. What's number 1?
Okay, cash flow.
Cash flow. So basically, when you invest in real estate and you rent your real estate, you get cash flow from that real estate. So let's say you buy a property for $200,000. After your mortgage and expenses, it costs you $1,200, and you get rent of $1,700. You now have $500 in positive cash flow. So cash flow is by far the number one reason that you're going to want to invest in real estate. It's called a cap rate, and that is your return on your investment, basically. And your cap rate is, in today's world, you should be shooting for somewhere between 7 and 10% on a single family. In apartment complexes, multi-units, that cap rate's going to be a little lower because the return is more guaranteed. There's no vacancy loss risk there. So cash flow is the net income you make after you pay everything. And the great thing about it is, if you have a mortgage on the property, as you pay the cash flow down, as you pay the mortgage down, your cash flow actually increases and you don't do anything. And it's predictable. You know, it's a steady. Every month that income is coming in.
All right, and number 2 would be passive income. Explain that.
Passive income is, so there's active income and passive income. So we have active income working in our business, right? Because we're actively participating. Well, if we were to invest in ABC company and never do any work there, that would be passive income. So you can make real estate passive income by not actively participating. So let's say you decide, I want to buy 10 properties. And I got, $1 million to spend or whatever. So, or to invest, right? I have $200,000 to invest and I'll finance the rest. So you would say, okay, Rick, Sarah, find me 10 properties. I'm going to buy them, and then we're going to let you manage the properties. So you manage the properties, you handle everything, you pay the mortgages, you do everything for me, and I just collect the income. So that would be a passive investment.
You're not going to go over the rest?
Oh, did I miss something? Sorry. Oh, I got it. That's good.
Okay. Long-term return would be what?
So obviously a long-term return, there's no trick to that. It is what it says. So it's a long-term return. So you're not buying and flipping stocks day by day. You can flip real estate. Not my favorite way to invest in it, but you can flip real estate, but you're only as good as your last flip. You mess one of those up, all your capital's gone. Rental real estate tends to be a long-term investment, 20 years, 30 years, 10 years, where you buy the property and you just get that steady cash flow over a long period of time. So in addition, it also can pass down generations. So if you take New York City is my favorite example. So in New York City, where they build those skyscrapers, they didn't want to sell the land. They're like, this land's going to be worth gazillions of dollars. So they do a land lease on the land. So there's so many multimillionaires created in New York, families and families and families, that's why they call it old money, where they're just collecting that money from that land lease on those skyscrapers, and they're collecting it forever, and they just pass it down generation after generation after generation. It's just a steady flow of substantial income.
And appreciation?
Yeah, of course, everyone's talking about crashes this, crashes that, crashes this. Well, if you don't look at today, if you look back to 2021 until today, you're going to find a pretty steady increase in appreciation in all real estate, in all classes, in commercial, residential, agricultural. You're going to find that it pretty much increased pretty consistently over the years. Now, some years it goes up a ton, some years it comes back down and corrects. So if you look at it year over year, you're going to see that chart go like that. But if you look at it over a long period of time, it's a pretty steady increase. So not only are you making cash flow, you also are gaining appreciation. So that $200,000 house you bought 20 years from now will be worth $400,000. You'll have made $200,000. Had a guy in here interviewing, and he said he bought his first house. He was a little younger, and he said he bought his first house in Georgia as a short sale. I was like, wow, your first house was a short sale? I mean, that alone was like, wow. And then, so he said, I paid like 80 for it and sold it 5 years later for 150. He goes, it was at that moment that I realized there's something here and I want to figure it out. So there's definitely something there, and it's definitely going to, well, you can't always guarantee anything, but history says that real estate is always going to appreciate.
Okay, and why is it a safe investment?
It's a safe investment because how much land is there in the world? Not how much land is there. How much more land are they going to build in the world?
I don't know.
They're not going to build any, right? There's as much land as there is. You can't make more real estate. You can't make more real property. You can change the land, you can change the property, you can do all kinds of stuff with it.
You never know. There's so much ocean. There could be worlds under there that's going to come up.
Okay. Well, for the purpose of this,
Florida used to be underneath water.
That's what they said. Might be against
so.
it, huh? That's what they said. Well, if that's the case, then if it's all global warming and everything, then there's actually going to be less real estate. That's even more reason to own real estate. So basically, it's a very safe investment because it's rarely going to lose value, and there's only so much of it. You can't make more. I mean, maybe we'll be buying property on Mars and the moon one day, I don't know. But right now, on Earth, there's only so much property. And the asset very, very rarely loses value. It only goes through trends maybe and loses value, but typically it appreciates. It's also a highly tangible asset. It does not lose value due to inflation. In fact, just the opposite. It goes up with inflation. So it mirrors inflation. So you're not going to, one problem with if you buy something for $100 today and it doesn't go up, then 10 years from now it's really only worth $50 even though you paid $100 for it, right? Because of inflation. Well, real estate will go up with inflation as well.
Why can it help on your tax cuts?
Well, we personally know get the advantages of that. So the government loves investors because you develop land, you move society along, you do all that stuff. So they encourage you to purchase property by offering you tax incentives. So there's property tax. The most Haley, I can't read that small print, by the way. For some reason, this paragraph went real small. All of a sudden on the paper. But anyway, so the best tax advantage that it offers you is depreciation. So you depreciate your property in a residential over 27 and a half years. Okay? So basically you take the value that you paid for it. So let's say you paid $200,000 for it. You would divide it by 27 and a half, and every year you get that tax deduction off of your income until it's fully depreciated. So every year, if you own $1 million worth of property, you get what? Is that 27? I don't know what it would be, but it would be somewhere around $20,000, $30,000, $40,000 in tax deduction. So just straight off the bat, and it's kind of a deduction you pull out of the sky, quite frankly. It's a deduction for depreciation of the property because the property over years is depreciating. You're going to have to repair it and stuff. So that tax deduction comes directly off of your income. You also can, any travel costs or any other expenses. So when you invest in real estate, we recommend that you create an LLC or your own company to invest in it. You don't want to put your personal property at risk, right? So create an LLC so you have the blanket of a corporation. Well, now you can deduct all of your expenses that were involved in that. When you have meals and discuss real estate, when you go visit the tenant, all your utilities that you pay there, all your business expenses, all of that can now be deducted. Okay. Also, all the costs of repairs and maintenance can be deducted, and then any of your legal and management fees. So any fees that you would pay us to manage the property, that can all be deducted, even though you don't really pay that. You're still having that $500 in cash flow. So you turn that $500 in cash flow now into $1,000 in profit a month because of your tax deductions.
All right, and the last reason, which is your favorite reason, which really isn't a reason, it's just explaining it, is multiple ways to invest.
Yeah, there's tons of ways to invest. You can just buy a REIT. Just go and research REITs, buy a REIT, just like buying a stock. We would have nothing to do with that. They'll return somewhere between 10%, around that. You can also join groups. So we put groups together. If you're interested in grouping your money with other people and you don't want to take on the full responsibility and just have passive income, you can syndicate with the groups. You can, if you have a little bit more to invest, you can buy apartment buildings. They are by far one of the best investments because in an apartment, let's say, if you have 20 units, how many of them are vacant at any given time?
Yeah.
Huh? Let me just say a number. 1 or 2, right?
Yeah.
Yeah, so now those other 18 are still bringing you income. If you have a single family home and it's vacant, how much income you got? You have one single family home. None, right, exactly. So apartments, they basically take your risk and spread it over. But apartments are hard to come by. People don't get off of them very much. And when they do, you'll pay top dollar. That's why your cap rate is less. You get less return on your investment in an apartment because less risk. Higher risk, higher return. Lower risk, lower return. You have single family homes. There's also some duplexes around. Occasionally you'll find a triplex or a quad. But typically you're going to have a single family home, a duplex, and then an apartment building. But there's tons of ways to invest in real estate. And that's what we're here for. We're here to guide you and create a plan for you specifically. So we'll sit down with you and say, okay, what are your investment objectives? And then once you have those investment objectives defined, then we'll create and cater a plan specifically for you to basically give you the highest rate of return. That's our job. We actually have a responsibility, an ethical responsibility. Our job is to get you the highest return on your investment, and that's what we're going to do. Welcome back. It was nice to have you. Okay.
But this is our third video that you've welcomed me back, so I don't think you need to do that anymore.
No?
No.
You haven't been in my last 2 videos.
So I've been in, this is the third video that I've been back in, or at least the second.
Yeah.
Yeah. So we don't need to go over welcome back anymore.
Well, I don't have to welcome you back if you're here every week, right? She's like, "It's you coming up." Huh? Ellie just said, she's like, I'm going to leave again. All right, anyway, if you're thinking about investing, you want to invest, we are the ones that can help you. 386-866-1007. We manage properties for other investors. We work with other investors just to buy the properties that they're going to manage. We have our own properties that we manage, so we're not just selling something we don't believe in. We believe in it, we participate in it, and we want you to be involved in it.
Oh, or as little involvement.
Right, as much or as little as you want. We can cater the program to you however you want it to be. 386-866-1007. One of our team would love to help you. Again, 386-866-1007.
Who's gonna turn it off?
Oh, from over there? Really? Wow.
Bye.